Have you ever wondered what the difference is between a member-managed and manager-managed LLC? Have you ever wanted to know why some people use a member-managed and others use a manager-managed LLC? If so, you're in the right place. Stay tuned for the answers to these questions right now. Hi, I'm William Dolan, and this is Esquire Advice, where we explain complicated and lucrative real estate and business topics. Remember, we are not forming a lawyer-client relationship by way of this channel. Always consult your local attorney before taking any action. With that said, grab a pencil and a piece of paper and get ready to learn. Welcome to our episode on member-managed versus manager-managed LLCs. But before we get started, please kindly hit those like and subscribe buttons so we can keep bringing you valuable and profitable content. A member-managed LLC means the ownership interests and the management interests are consolidated into one group. You guessed it, the members. The ownership interests are things like the right to an allocation of profits and losses and the right to distributions. Management interests are the right to make decisions and carry out the business of the company. With a member-managed LLC, you could have decisions made by a majority of the members. For instance, if there are 3 members, the agreement of 2 members on any one item would control. You could also have decisions made by the members constituting greater than 50% of the ownership interests. An example here might be helpful. Let's say there are 3 members, but one member owns 60% of the ownership interests and the other 2 own 20% each. Here, the member owning 60% will be able to control all of the decisions of the company, even though he or she is just one member. Now, management control does not have to be based on a majority. It could be 60%, 66%, 75%, 90%, or any other percentage of the members. You could even set different percentages for different types of decisions. Before we move on to manager-managed LLCs, remember the default taxation classification for all multi-member LLCs, whether member-managed or manager-managed, is a partnership, which means you will have to file a partnership income tax return for each of these LLCs. If you're planning at some point to have more than one LLC with the same ownership structure, you should consider using a holding company structure to save money on income tax preparation and provide some other benefits too. See our video on holding companies for more information on that topic. Okay, so on to manager-managed LLCs. With a manager-managed LLC, the ownership interests and management interests are divided. The members will still own the right to profit and loss allocations and the right to distributions and certain other rights, but many, and in some cases, all of the management rights will be delegated to one or more managers. There are 2 general management structures. One is where there's a board of managers, like a board of directors with a corporation. Now, I know some of you are thinking, why would I want a board structure with an LLC? If I wanted to do that, I would just form a corporation. The reason why you may want to use an LLC with a board is that corporations have a vast and rigid set of rules with minimal room to modify them. LLCs, on the other hand, at least Delaware LLCs, are virtually infinitely flexible. Having said that, a board-managed LLC is likely the least common type of management structure. The more popular manager-managed structure is where there are 1 or more managers who make and carry out the business decisions. You will appoint managers in the LLC agreement or operating agreement of the LLC. For manager-managed LLCs, some states require that the formation certificate filed with the state either indicate that it is manager-managed or include the names of the managers. See our video on how to start an LLC for more information on this topic. The managers can be, but do not have to be members. Let's look at a few examples. You could have an LLC owned by a husband and wife where the wife has a busy career and the husband buys and manages real estate, let's say. Maybe the wife is a physician and generally not available during the day to sign paperwork. Here, it may make sense to use a manager-managed LLC where only the husband is a manager, but the husband and wife are both members, that is, owners of the LLC. A manager managed LLC also gives you the flexibility to divide the ownership and management interest down the road. For instance, let's say you have an LLC owned by 4 people. You could start with all 4 people being managers too, but down the road, maybe the primary careers of 2 of them render them unavailable to contribute time to the company. Here, perhaps only the 2 members that are available should be managers and the other 2 should resign as managers and only be members. Managers do not need to receive additional compensation for acting as a manager, but they can. So let's go back to our last example. Perhaps those 4 people all started owning 25% of the LLC and were all initially doing a roughly equal amount of work. But remember, then 2 of them could no longer contribute their time and resigned as managers. Now you have 2 of the members doing all of the work, but everyone's still getting an equal amount of the profits. So you could have the managers get some additional compensation off the top to adjust for 2 of the members doing all the work and the other 2 doing none of the work. Finally, in any case, please make sure you are doing everything you need to do to maximize your LLC protections. And you guessed it, we have a video on that topic too. I would recommend periodically revisiting that video to refresh yourself on how to protect yourself with your LLC. I hope you've enjoyed our video on member managed versus manager managed LLCs. Please kindly hit those like and subscribe buttons so we can keep bringing you valuable and profitable content. Thanks for watching, and I'll see you next time.